it would just blow the minds of some underperforming retail traders. Do you have a routine that you're going through on a daily basis that's going to help you get better, but do more of what you do well and do it bigger? We're not here to help you when you're breaking very elementary rules. If I can lose less when I'm at my worst, I can take home a lot more money.
Hello, everyone. My name is Andrew Aziz from Bellafiore Traders, and today we have the honor to interview Mr. Mike Bellafiore from SMB Capital. And with me here is William Hathaway, and we are really happy to do this interview with Mr. Bellafiore. Mr. Bellafiore, I got, one of the reasons that I got interested in day trading was after reading Mike's book, One Good Trade and PlayBook. And, those two books really got me interested because especially in One Good Trade, Mike was talking about what's the life of prop traders and how amazing the trading life can be. So we reached out to Mike, and because we know Mike at the SMB Capital, they do a lot of contribution to the education for traders. They have SMB University, and they have a YouTube channel that are daily and actively publish educational videos for traders. So they are really contributing to the world of trading. Especially, it's very important for us retail traders because we don't have access to all of the knowledge and information that is, used to be only limited to Wall Street traders. So having said that, I just wanted to introduce Mike and welcome you to our chat. And please, Mike, please feel welcome to introduce yourself and SMB Capital.
Sure. I'm Mike Bellafiore. So I'm the co-founder of SMB Capital, and we're a proprietary trading firm located in Midtown Manhattan. I'm coming to you from my office in Midtown Manhattan. We trade equities. We trade a little bit of futures. We trade a lot of options. We do some automated trading. Mostly our P&L comes from discretionary trading. And so lots of people always ask, what's proprietary trading? How's it different from retail trading? So at our firm, traders are funded by the firm. So we don't allow anyone to put up any capital. We don't take any capital from any of the traders. It's purely risk capital from partners. And we provide all the technology. The technology is proprietary. You have to be at the firm to use our technology. And certainly all the downside risk is taken by the firm. So not that this is advisable, but if you rip up a couple $100,000, like some people do in a retail account, or you rip up $50,000, as some people do as independent retail traders, that's actually not your loss. That's the firm's loss. It's just a drawdown in the props trading space. And so that's an advantage. And so prop traders are trying to use firm capital and the resources here to be really big traders. We've specialized in training traders from zero to consistently profitable to the best being seven-figure traders. We've been around since 2005, still growing, which is unique. Most prop firms are shrinking. So we've been fortunate enough to work with some really good people, and that's not the case with us. But happy to chat with you guys and share with the trading community anything we can to help them get a little bit better today. And I like what you said before, and this is important to us, which is it's important for us to give back to the trading community for lots of different reasons. And so good to be talking to the two of you and try and make a little bit more of that happen.
Yeah, thank you so much. And I want everyone to know, we at Bellafiore Traders are retail traders. Mike Bellafiore at SMB, they are prop traders. So we are not competitors at all. And so we can share information and have these chats. And Mike, the point that I reached out to you is that I know you guys are very successful through all my research, and I followed some of your traders and you. And that's just not the case in the retail world as much. And so I wanted to hopefully nitpick at your brain and through your experience of what retail traders can learn from prop traders, and maybe go really deep into that because it's a whole different world. Is that an okay idea that we could try to talk about?
Sounds great.
Yeah, so that's a big one. You just explained what prop trading is, and many people in retail traders, they don't really understand it, but you gave a perfect explanation. So what can us retail traders learn and use as best practices from prop desks like yourself?
Yeah, so I was in London recently. We'll start there. And I was at a public event, and I was asked, what would you go back and tell your younger self? Which is really a great question.
That's a great question. I love it.
Particularly since I'm not as young as I used to be. And so I started trading in the late 90s. We started SMB in 2005. So we've seen a couple of things. And what I said to my younger self, what I answered about what I would say to my younger self is, I wish I'd been more professional. And so one of the things that is different for some independent retail traders than professional prop traders is that most professional prop traders are more professional. Not all. And we have some traders here who we'd like to be more professional. And we have some traders here who are just so diligent and work so hard, it would just blow the minds of some underperforming retail traders. And so I would start there. Do you have a routine that you're going through on a daily basis that's going to help you get better, that's going to help you understand what your edge is better, that's going to help you eliminate what you don't do well more quickly, so that we're tapping into your true, unique talents? So I'd start there. The second thing that is perhaps one of the things holding back independent retail traders is they don't get exposure to lots of different types of edges. Sometimes they don't get exposed to any edges at all, and that's a whole nother show. But well, let me take a step back and tell it in a story. So on our desk, if you make $1 million net in trading P&L for the year, you get what we call a green shirt. And so people clamor to one day be able to get a green shirt. It's something that people aspire to. I've made $1 million net in trading profits in a year. And a black shirt is $2 million net in trading profits for the year. And so the last trader to earn a green shirt on our desk, the latest trader to be hired and come up the curve and get to that level, he started trading and focused on certain types of setups with edge that were not best for his unique talents. Incredibly talented person, one of the most talented traders on our desk. Incredibly bright, very hardworking. And yet, honestly, at the beginning of his career, he was floundering and he was a fledgling trader. And he wasn't doing as well as he wanted to. He was frustrated. And one of the things that he needed to do, and we needed to help him with, was get him exposure to different types of edges to different types of strategies with edge that fit his unique personality and cognitive strengths. So what I see with some retail guys is that, maybe they go and find a mentor who has a strategy that is profitable. And they try and learn that particular strategy, and it doesn't work for them. And then they conclude, well, I'm not a good trader. Or cynically, they might conclude, well, that strategy doesn't work. Well, it might be that the trader, the student, his talents weren't best suited for that type of strategy. And so there's a really great book that I'm reading right now called Range by David Epstein, a former New York Times writer, former Sports Illustrated writer, wrote The Sports Gene, another great book. And he spends his time in this book debunking this idea that specialization is the key to success. So lots of parents like myself are inundated with the thoughts that if you want your kids to be a Division I athlete or a pro athlete, you got to get them into one sport and specialize early. And you hear stories about Tiger Woods playing golf when he was 2 and on. Or great chess champions learning from the age of 4 and being grandmasters at such early ages, and their commitment and practice. And this book sort of exposes the flaws with that type of conclusion and introduces a really important concept that I've been thinking a lot about at our firm, which is the importance of sampling. You might say the importance of experimenting. And I'm disheartened when I meet independent retail traders who try that one strategy and then give up. Because that isn't the way that we do it here. On our firm, the first course you go through is a foundational course. We call it SMB DNA. Everybody takes it. And then the second part, and a very important part of our training, is called the winning trader. Inside of that are 19 independent strategies that are all very different, that traders sample, experiment with for a week during their initial training process. And by the end of that process, we're not interested in them being profitable. We're interested in them merely identifying the types of trades, a niche, that they want to focus on for the next stage of training. That's it. Just get exposure to it. Just try the trades. Just create playbook trades around those particular setups. See which ones you like. See which ones you don't. See which ones fit your talents. See which ones don't. And then they move to stage 3, which is you interview to be on a team that tends to focus on certain types of trading. And then we put that person on a team. And then and only then are they really digging deeper into a very specific type of trading, working with senior traders with their edges. And only then do we really expect them to start being consistently profitable. And that's well into the process. And so those are a couple of things I see with independent retail traders, which I'd love for them to think about differently.
Well, that's very, very interesting, Mike. You mentioned that, because when I started early in my trading career, I also tried to learn different strategies from different people. And we have scalpers, we have the people who will trade for a longer time period, we have the people who trade the penny stocks, and we have the people who trade more higher floats stocks. And I had a lot of bad losses trying and sampling all of these strategies, but eventually I found my niche in the mid cap and higher float stocks, because it just fits my personality really well. And then we had this discussion with Dr. Brett Steenbarger as well a few weeks ago, when he said people have different personality, and they have to find their own strategy that fits their personality. For example, I myself, I'm a very impatient person, so I'm more toward the scalping in the shorter period of time. I just don't have the patience in me to really hold the trade for a longer term period. I know it works in disadvantage for me, but it's just my personality. And after this sampling that you mentioned, I found my niche in the market.
So you consider yourself to be more of a scalper?
Yes, I take a little bit of a bigger size, but I get out of my trades more quickly, just because I'm very impatient. And most of the time, if I hold to my position, it goes into a more, profit for me. But it's just my personality that I really want to finish my trading sooner than later.
So let me contribute 2 thoughts to what you just said. So one, Dr. Brett Steenbarger is the very best trading coach in the world. We are fortunate that he's actually in the office over from me right now, straightening out some traders on our desk. And we're very fortunate to have him work with our traders and with us. And, I am constantly bouncing ideas off of him about training and about recruiting and about development. And you can't have a better resource in the world than somebody like him. And that's something that retail traders don't have access to. You imagine if you could go talk to the very best trading coach in the world after a period of drawdown. or after a period of success where you really want to ramp things up, and somebody who can give you strategies and techniques to help you make more from your best setups and push your overall abilities further and longer and harder, and get you to understand what you perhaps don't do as well. And what's interesting is that Dr. Steenbarger is trained as a psychologist, and I think a lot of people assume that most of the work that he does with traders at our firm and hedge fund traders and institutional traders for whom he works with is to clear their mind, hear what's wrong with them. And he doesn't do very much of that at all. He works with traders on our desk a lot with edge. Let's figure out where your edge is. Let's figure out how you can refine it a little bit better. Let's understand when you're trading at your best. It's not a lot about trading on tilt or not hitting out of losses, or being upset about your girlfriend. There's some of that, but not a lot. And then the second thing is, so one of the things that frustrates me when I go onto Twitter and start reading stuff about trading, and everybody has an opinion about what it's like to be a good trader. And if you have a Twitter account, apparently you can be one of the leading coaches in the world and just spew your opinion about what's going on and not have to have worked with traders for a long period of time or been a successful trader, or you can just give your opinion, which is good and bad. And one of the things I think is bad is when people say things like, you can't make real money if you're scalping. The only way to make a lot of money is to hold for the real move. That has not been our personal experience at our firm. There are black shirt traders, guys who make $2 million net for the year, who focus on scalping. The very best intraday trader that I know in the US is a scalper. He doesn't work at our firm, unfortunately. He's an independent scalper. And there are, and particularly in this market with volatility so high, man, there's quite a bit of opportunity to be had scalping. And I'd say one of the other traders I work with outside of our firm, who's a huge trader, is somebody who really watches price action. He's not holding for longer term swing trades, isn't even holding for intraday longer term trades. He's in and he's out. He's very big. He's knows what he's looking for when he sees it. He trades with massive size. He's very aggressive. There are times when I read his daily report card when I just am amazed at how wonderfully aggressive he can get at the right moment. His ability to put on size is just extraordinary. But he's not buying Apple and holding it for 10%. And so you can have a really long, sustaining, large, profitable career being a scalper.
Yeah, I agree with you, and I'm doing it. A lot of people asking me to change my strategy to more, intraday, longer time frame. But it's just, as you mentioned, edge. It's working for me. I'm profitable on that, and I really don't want to mess around with something that is working for me at this moment. I really appreciate the comments, really.
Yeah, and Mike, I want to go back to the first thing you said about professionalism, because now we've said a lot of things that traders can't do on the retail side that prop desks do. Like, and I'm guessing if a trader walked into your office in their underwear, all groggy, and just started hitting hotkeys, right? You would not let them do that. But retail traders, they do those type of things. So what are some things that retail traders can actually instill that you do at prop firms? Okay, so we can't have Dr. Brett right next to us watching over our trade, coaching us, right? So what are some tactical things that people who are watching this can actually execute that a successful prop trader would recommend like yourself?
Yeah, and so let me just go back to something that Andrew said and then answer that. And so we actually had somebody reach out to one of our top traders who was a scalper and suggest to that trader to consider not trading as much and holding some trades on a longer time frame. And when I found out about this, when Dr. Steenbarger found out about this, we had a very blunt conversation with the person who gave this advice, which was, don't ever talk to our trader again like this. That is terrible advice for this trader. Let him do more of what he's doing well. Stay away. And so, yeah, whatever edge you have, it's not that you shouldn't be trying to expand your playbook and the breadth of your trades. You should. I like to say maybe spend 10% of your time sampling other trades that you can work into your playbook, but do more of what you do well and do it bigger. Let's answer, A-Dog, let's answer your question specifically. Is it okay if I call you that?
Please do, man. I love it.
So if I can answer your question specifically. So one of the things that independent retail traders struggle with is they don't hit losing positions, or they lose too much in bad trades. And I will just say to you that on our desk, you have an intraday loss limit. You have a per trade loss limit. You have oftentimes when you're developing a weekly and a monthly loss limit. And those limits are set between yourself and the risk manager at the firm. And those loss limits are written down, and you sign a document that makes sure that you're on the same page, that these are going to be your risk limits. And then when they're bumped up, you revisit that document and you get on the same page again with the risk manager. And if you are not adhering to your intraday stop loss, what do you think the risk manager is going to do to you?
Cut you off.
Close your position, yeah.
You're going to be penalized. And so, the first time you do it, you're not going to be able to trade for a couple of days. You're going to be on the demo. We don't care if you got slipped. I don't care what the reason is. You have an intraday stop loss. That's what it is. Think about all of the bad things that can happen before you sized into it. You're responsible for not losing more than that dollar amount. The firm has entrusted in you the right to lose up to that amount on an intraday basis. It has not entrusted in you the right to lose 1 penny more. You have given your word that you're going to stay within those guardrails. And so if you go over that, for the most part, you're going to be on suspension. You're not going to trade for a couple of days. You do it a bunch of times, you're going to be fired.
Yeah, I think that's one of the main advantages that prop traders have, is their discipline is also enforced externally. But us retail traders, discipline has to be internally, because there is no risk management. If we do anything stupid, there's no one that monitoring our account and coming to us and tapping on our shoulder. And I think that's one of the huge advantages that prop traders have, that the external risk management and enforcing their risk management.
And so I talked about this recently. My advice to retail traders, and A-Dog, you asked for something specific. I would, if I were a retail independent trader, I would empower somebody to be my risk manager. I would empower them to hit me out of positions if I went over my intraday loss limit or my trade limit. I would write up specifically what all those loss limits were. I would empower a friend, a trading friend who was acting as a risk manager, to suspend me or penalize me if I went over that. And I would mimic what's done at the professional level. these are not trading issues that you can have. There are certain things that traders do where we just don't really spend any time on, like they're fireable offenses. We're here to help you work on your edge. That's hard enough. We're here to help you with technology to make more. We're here to help you get more capital to do things. We're not here to help you when you're breaking very elementary rules.
That's true.
And so, because there's just too much to do, and there's too much opportunity out there, can't be spending time on nonsense like this. So, dog, that's my suggestion. Figure out who you're going to empower to be that person for yourself. And I think if you give it some thought, you can set yourself up in a situation like that.
Yeah, in addition to Trading Buddy that you mentioned, also the William has worked a lot on the mechanical risk management for retail traders. The platform that we're using, Das Trader, they have a risk control parameter. So if you hit that max loss, they can actually block your account so you're not able to trade anymore during that day. And William has actually been a big advocate of that mechanical risk management. So for people who are watching this, we recommend that if you don't have anyone to externally enforce that for you, maybe you can talk to your broker or to your trading platform provider that put this risk management in your account. So if you hit that max loss, you're not able to trade until the next day or whatever that you want to have that.
So yeah, on that note, I gotta tell Mike this really short story, because Mike just told the world that this is one of the most important things, but it's such a simple thing also that we can't deal with. And so Mike, when I was dealing with this issue and going past max loss and needing to figure out how to stop myself, I researched DOS, and they have risk controls. So I put in the risk controls just like you said, but then I can simply go in and change the risk controls after I hit max loss. I could change it, and 3 minutes later, I could trade again. Okay, this was many years ago. So then I was thinking through what can I do, and I emailed them and called them, and I asked them if I could lock them in until a specific date that no matter what, I could not change my risk controls, and they did it for me. And then on top of that, they said they could incorporate a buddy system where they only can change it if a buddy calls and tells them from my account that it's changeable at this point. So these are things that we can actually do. We can actually mimic this, what he's saying that the prop firms do automatically. We have systematic ways in our trading software to do this.
That's great. That's great. And I would recommend you guys start doing that. And look, oftentimes experienced traders at other firms, this isn't the case today at our firm, think of a risk manager, somebody who's getting in the way of their ability to put on risk. This is somebody that's hindering their freedom to make decisions and trade. A good risk manager who develops a relationship with the trader is there to help the trader to grow. He's there to protect them when the trader is not thinking at their best. He's there to protect them from those just crazy moves that are going to happen in stocks, don't make any sense and last longer than you think. But if you have a stop loss, then it's just a big loss and you get to live to play another day. That's a huge benefit for the trader. If you can, and I'll say this to you. So one of the traders that I work with outside of the firm came to me, and he's just a big time trader, north of $4 million a year and P&L, which is pretty big for prop trading. And the number one thing he wanted to work on was risk management. And his thesis was, if I can lose less when I'm at my worst, I can take home a lot more money. And that's so true. You want to save your risk for your A+ trades. You don't want to be putting on a lot of risk in those moves that are just irrational, that are putting your month and your quarter in jeopardy, all that hard work you've done in jeopardy for some irrational move. So that risk manager is not there to get in the way. That risk manager is there to help you grow. And when you get bigger, and when your intraday loss is $150,000 to $200,000 a day, there's a fine line between stopping out and just taking a large loss and ruining your month.
That's a great point.
Yeah, I always considered it as my best friend that helps protect me against myself. That's how I viewed it. Well, thank you so much, Mike. We want to go into now a little different section of this and review some trades. Number one, we will love to see a trade setup that you have. And before that, I want to ask, can I share with you one of my trades that a lot of our community members kind of have learned and try to incorporate into their style so we get a completely different perspective on this?
Let's do it, A-Dog.
Awesome. So just like you're calling me by my A-Dog name that I got from your books about having nicknames, I also named my trades specific names because of your book as well. So this is called the harmonious chart setup, okay? And I'm going to share my screen. Let me get this going here. All right. Can you see that?
I can.
Yes. Okay. Let me do one quick thing here. Move that right there. Okay, so this is my harmonious chart. You talk about your traders, we wouldn't believe what kind of discipline they have and what they do to be successful. I would stay up for hours and hours. My eyes would be bloodshot. It'd be 3 a.m. and I'd be looking at these moving averages, trying to find out my edge from the moving averages. And with another trader, I found that when all of the moving averages are on one side of the price action after some sort of big gap up or big gap down off of a news catalyst, all of the resistance and support where traders would be putting their sells, where people wouldn't want to go into, or where people would just be leaving the market because it might be in a choppy spot, all of those traders were gone. And my edge was that every chart was pointing one direction. So this was a specific trade on HD from just a couple days ago. It had, the big news. I'm sure you're familiar with it. It had the news of the earnings. So had the gap up, waited for the pullback to come back down to my moving averages in VWAP, waited for the first 1 minute candle that was slightly bullish. And on the time and sales, I was seeing a lot of green hitting the ask. As soon as that happened, I had my harmonious chart where the 9 moving average, the 20, the 50, and the 200 were all below the price on every single time frame, which means that there was not going to be any overhead resistance. So I went long, played a risk to reward of stop under this little part right here, risk to reward 4-to-1, and then like a 5 and 6-to-1 or so. And I got out near what ended up being the top of the day, which I didn't know. I don't care about hitting tops or bottoms, but I do care about hitting my risk to reward on my A1 setups. So my question is just feedback on that to you. If you have any thoughts about that type of setup and what I explained. So anything you got on that would be amazing for us.
Okay, so one of the things that we don't want to gloss over for the context of our trade is the news catalyst. And, when I wrote the playbook, I talk about seeing your trades by putting together certain variables. And so one of the variables that we want to cover is a news catalyst. So we'd want to know how good were the earnings, how good was the news, how good is the core of the business, what is the guidance for the full year going forward, how much did they beat by, what's the short interest in the stock, what's the ARVL on this particular day. But those are things that give us some color as to how good the news catalyst is. And the reason why we think that that's important is because that can bring out lots of big money buyers. When we're making trades, we want to find stocks that are going to get bought up for the day, that can finish high of day, and for swing traders and beyond. For the really best news catalysts, you can have consistent buy orders that come in for multiple days from big money traders. And so I'm starting there. I'm looking for something that's going to capture the attention of a big money trader. And so we call this catalyst trading. In this case, you can have a news catalyst that starts it, but you can also just have a technical setup that isn't of itself a catalyst overall, but it's getting these big money traders to be interested in the stock. So that's number one. The second thing is we always want to take a look at the big picture for the overall market. So, if we want to get long Home Depot, how is the overall market doing? How are the SPYs doing? Are we in a strong market overall? In this case, we are. We're in an uptrend. That's going to dictate how order flow comes in. Are we in a shorter term, strong or weak market overall? Where are we in the context of the entire market in terms of strength or weakness? So if the overall market is strong, it's going to make our longs more likely to go up. If we're trading in 2007 and 2008, these buys probably are not going to work. Okay, and so we want to start those things. And then, so one of the things that I really like what you did is we start to, after we have the big picture, after we have the news catalyst, is we start to get into our technicals. Now, for somebody like myself, I'm going to want to know where this sits on a longer term chart, again, to give it context. Are we at a 52-week high? If so, that's going to make it more likely to go up. Are we overbought and far away from our Bollinger Bands? A couple of standard deviations away from that. That's going to give me pause that perhaps we're not at a good price. Are we oversold? And now we're getting a positive news catalyst. That's going to make it more likely for this to go up. And so I want to see that. Here you're doing a terrific job of that next step, which is what are our intraday technicals doing? In this case, you're saying, I feel like I have edge when the moving averages align in a way that makes sense, and we start to see some strength. Okay, so if I were grading this trade, I would say A+.
Yes, thank you.
On your intraday technicals. Very good. And then what I really liked what you did as well is you pointed out the strength that you were seeing from the tape. So you were recognizing a bullish pattern from the tape. And that's another one of the variables that we want to put into our trade. So I would say A+ trade, or A+ job on reading the tape. Yeah, so reading the tape is a very important indicator for active short-term traders. And we actually, right now, are putting together a new educational program based off of the trading of our top trader. And it's a swing trading course. And so what's really interesting about his trading is that he also uses the tape for entries and for sizing when he's making swing trades. So I think a lot of times people get exposed to reading the tape. It takes some time to learn it. They don't get it, so they dismiss it, or it's too hard for them at the beginning, so they dismiss it, or they feel like they're trading on a longer time frame, so they don't need it. I haven't found that to be the case in either one of them. It does take some time to get it. So I like what you do there. Another variable that we talk about is intuition. As you get more experience as a trader and you are watching that pull-in, does it feel like it should go up to you? And going from there. And so, yeah, this is how you build out a career, is you put together playbook trades that make sense to you, and you build upon them. I'll just say specifically about your moving averages.
Please.
So we don't use moving averages the way that you do. We use something called VWAP. So we are going to want to get long Home Depot when it's reclaiming VWAP after a pull-in and a strong opening drive. That's going to be an indicator that is important to us. We are going to want to see that VWAP is trending up. And what's interesting here about all of your moving averages is that they're trending up. They're not flat or descending. which is a bear sign for technicals. And what's going on here overall is you're seeing that strength.
And the blue line here is VWAP. Andrew is a heavy VWAP trader, and we teach it a lot, and that's another thing. I say moving averages, and I include VWAP in there incorrectly, but that is the blue line.
Okay.
Mike, I have a question about the comments that you mentioned. So when the stock is gapping up in the pre-market based on good news, do you have a direction bias in the pre-market, like going long or going short? Because a lot of time we see a stock is gapping up in the pre-market, but they really sell off at the open. How do you get any bias, directional bias?
So I do, but I don't know if that's right.
Yeah, no, because we do have a lot of traders that they have a general rule of thumb that they don't short a stock that is gapping up for good news or good earnings, or they don't go long when the stock is gapping down. Really, just the rule of thumb. I just wanted to know your opinion on how you trade. Definitely, there is no wrong or right answer, really.
Yeah, so there's certain trades I'm going to take depending on how a stock is opening up. So if a stock is gapping up a bunch and I feel it's just overextended, you know, today, like maybe like Target, huge opening gap, I may want to let that settle before if I feel it's opened up too much and it's maybe in a sector that isn't having a good run. Maybe I want to let that pull in a little bit, settle, and then get into it if I'm going to play it for high a day. There could be news like Macy's the other day where I noticed that a lot of the retail stocks are bouncing even at 52-week lows. So I'm going to make sure that I'm noticing that. I may notice with stocks like BBVY that on the second day after they get below day one lows that they just go to die. I'm factoring that in. I may notice in a strong market, high beta names tend to bounce when they sell off too much. I may notice in a really strong market, 52-week highs get bought up. There are going to be patterns that come to market that I'm going to use. And I do sit there on the open and I say, my thesis is this should go up. My thesis is this should go down. But I don't trade just off of my thesis. I then overlay a very specific setup in my playbook to attack that thesis. That is something that is different from pro traders and retail. So you guys at the beginning, well, what's the difference between pro traders and retail traders? So a big scalable retail trader, a big scalable pro trader is putting money to work after the setup is fitting their thesis.
And just one last question. Do you trade in the pre-market or no usually?
We do a little bit. I can't tell you that we make a tremendous amount of our profits in the pre-market. It's a very, very, very small slice. We do look at levels. My partner, Steve Spencer, is particularly good at observing important pre-market levels. There's a lot of volume done at a price. If a level is tested multiple times in the pre-market and stubborn, and then finally gets above there, that's going to be an important pre-market level for us. But it needs to be tested many times, and there needs to be volume in the pre-market at that level.
And it's just worth mentioning that SMB Capital and SMB University, they're actually sharing your morning sessions that your co-founder, Steve Spencer, is running them. And I'm not sure if it's free or it has to be part of the program, but I watched a couple of them for the previous days and they're really, really useful. And I learn a lot from Steve when he goes through the morning show.
Yeah, Steve is really terrific. If you're not following him on Twitter, I invite you to do so. He, in my opinion, and I believe this will be fact one day, he gives really tremendous, I always say he gives the best active, consistent commentary on price action than anybody else I'm seeing on Twitter, but I reserve the right for somebody to surpass him at one point.
Well, I second that. You know, I've been following Steve in Twitter and also in YouTube, and I'm watching that. And he's a great trader. He's really understanding the price action very well. So I second that.
Well, thank you so much, Mike, for looking at that trade. But I know people are going to want to see one of your favorite setups from your playbook or that you teach. So let's get into that now.
Hey, I just want to make one more comment about this. So,
please.
An indicator that, and you might have included this in your analysis, and just we didn't get a chance to bring it up. But RVOL is an indicator that's very important, and so if there's elevated RVOL, I'm going to be more likely and interested to get long. If RVOL is going to be under 1 or 0.8 or something like that, to me, that's indicating the stock isn't in play, and it's going to be harder for me to get long.
Totally understand. Yep. And in this specific top trade, I don't think I noted the RVOL, and that's something I can definitely remember now. So now we're going to, I asked Mike to bring one of his favorite playbook trades, one of his favorite steps for him to teach to all of us retail traders that will be actionable and executable once we learn it. It does not mean trade this the second you see it. It means study it, learn more about it, practice it in a simulator trading, and then do it with small size and try to see if it fits your personality and trading style. So don't just jump right into it right away.
All right, so let's talk about a changing fundamentals trade. So this is a picture of one of our traders who earned a black shirt at our end of the year company retreat.
Nice.
And so I like to start with the question, when do elite traders trade at their best? When are these elite prop traders who are at our firm or people I coach outside the firm, when are they trading at their best? They're trading at their best when they're developing a thesis, plus they're finding a setup like A-Dog did in their playbook, plus they're seeing it like A-Dog did by observing the tape, plus fight for price. That's equaling a good trade. When I see elite traders trading at their worst, I see them trading their ideas. I see them trading their bias, and we have to correct that. Oftentimes, when one of these elite traders sends me a daily report card and they're underperforming, drawing down, they say, I'm just trading with an opinion. It is time after time this comes up. So I point that out. If you are a retail independent trader and you read something on Bloomberg.com and you decide Apple should go up today because they just rolled out a news release that they're going to be offering more programming on Apple TV, I'm going to get long. That isn't how elite active traders, well, that makes a lot of sense. That isn't the way elite active traders are trading at their best. Commonly, we see traders underperforming in the retail independent space who are just making a technical trade. Just making a fundamental trade. Just looking for a setup. It isn't enough to just trade a setup to find elite trading. You need to be in the right stocks or the right products. That's so key. You've got to be in the stocks that have that most opportunity on an intraday and swing basis. You can be putting the same setup on in the wrong product or stock and be underperforming. You can be in, your stock selection and product selection can be so much better, and your results will get a lot better. I think that's something that is not talked enough about in trading. That's something that I think retail traders and independent traders don't understand enough, is what they're trading is as important, if not more in some cases, as the setups that they're trading. So how do I build a trading business? And so I want to provide some context to this trade. When I'm sitting in our training room, working with our guys, helping them go from scratch to consistently profitable and then better, I'm getting them to think about them building a trading business. I'm getting them to think about trades that they can put into their trading business. As A-Dog said, playbooks that they can trade, trades that are scalable, trades that are repeatable, trades that are identifiable, trades where you can control your risk, trades where you can put on substantial size. We're not here to make a couple of bucks. We're trying to build 7-figure plus traders. Trades with real risk. I want to save my risk for my A-plus setups. Are you doing that? I notice when elite traders are trading at their best, they are trading less, doing less, saving their risk, saving their emotional, intellectual, psychological energy for their A+ setups, and then striking. So we talked about the playbook. I like to think about it with these variables. What's the big picture in a particular setup? How's the overall market doing? What's the news catalyst? What are the longer term technicals doing? What are the short term technicals doing? What about reading the tape? What information does that have for us? What about intuition? We're going to put together multiple variables to make an A+ trade. The difference between a pro trader and an underperforming retail independent trader is we are putting together more variables in our trades to make a higher quality trade. Let's take a look at SWB Weibo recently. And so big picture for the overall market, we're strong, we've bounced. That's the context of this trade. Weibo is beaten down on the daily chart and is consolidating at a 3-year low before today's earnings report. You can see on the weekly chart that it sold off from 140, now hovering around the 40s area. It broke down from a really tight consolidation area, hovering towards really beaten down. Intraday Fundamentals, or News Catalyst. Weibo is a Chinese microblogging website. It's one of the biggest social media platforms in China. Reported 68 cents on revenue of 531.8 million. Wall Street expected 59 cents on 429.2 million. So they've beaten. They've beaten on revenue. They've beaten on the bottom line. Q3, Weibo estimates revenue to increase 6 to 9%, above Wall Street estimates, increasing. Now here is the news catalyst that gets my attention. Here's a news catalyst that we teach to get the attention of guys that we're backing. Monthly active users were 486 million in June, a net addition of approximately 55 million users year over year. They are growing. The core of their business is growing. Monthly active users is the most important metric for a company like this. How is that metric playing out? It is increasing. It is doing better. We talked about big money traders before. Those are the types of measurements that get big money traders to be interested in putting a play on a stock like this. All right, and so that's getting our attention. We talked about RVOL. In this case, RVOL's 5.5. I think this is in play. Spencer thinks this is in play. Our junior traders think this is in play. RVOL is confirming that it's in play. It's doing 5.5 times the normal volume on this day. Undeniably, this stock is really in play. It's as important to trade stocks that are in play that give you opportunity as it is setups. This is telling us this is one of those stocks. Short interest, 66.7%. What does that mean? Lots of artificial buying will come into the marketplace as shorts have to cover. All right, ATR 1.6 gives us a sense of how much the stock can move. Float 17 million. You guys mentioned, hey, do we look at the pre-market? Well, here's an example of how we do. Very prescient of you. 40.50 is a key pre-market level as we shape out here on our 2-minute chart. Lots of hitting and failing, going above and failing. 40.50 is the key level in pre-market trading. All right, so how do we attack this? We are attacking this thesis of I want to get long with specific trades in our playbook. And they have different names, and there's different ways to attack each and every one of them. So there are multiple trades inside of one bigger trade. The first one, we're going to get long, tier 1, when WB makes a higher low and reclaims VWAP. We talked about technical indicators. That's one we're looking at. We're reclaiming VWAP. We've got 2 green candles in a row. Okay, and we now have risk on for tier 1. when we're doing that. And so this is a pull-in trade. Okay. Setup number one from our playbook is a pull-in trade. Strong opening drive, pull back on light volume, reclaims VWAP, boom. Second trade, we're long tier 2. After WB tests pre-market and holds VWAP a third time, risk previous higher low, so the risk is below here. We can now see the wedge forming on multiple time frames. So the second tier 2 trade is multiple time frame support trade. We're in. All right, that's what we call that particular trade. I don't have time to teach that specific trade, but that's what it is. Yeah. Tier 3. All right, the wedge breaks to the upside, holds a pre-market high, and consolidates. So we're going to add T3, risking to VWAP. So we're getting above an important technical level that we've identified. In the pre-market, we're going to add risk. Tier 4, WB breaks above the high of the day. We're breaking an opening range. An opening range break is another trade in our playbook that have variables that we trade. I add another final lot. You're now in a good position of strength. You can see WB on our multiple time frame 1, 5, 15-minute trade. It's breaking out. All right, so for our last trade that we talked about, we're getting that breakout on multiple time frames. Trade management. All right, the stock fails 42 and retests. We're going to take some profits, sell tier 1 into 42. Price action's getting a little bit softer. WB fails into 42.50 and makes a lower high. We're going to sell tier 2. We're getting a little bit more softness. WB fails to get over 90 cents and tests 43. We're going to sell T3, tier 3, and hold the remainder into the close and swing the rest of that into the close. But we're taking profits when we're starting to see reasons to sell. So I wrote about that in the playbook. Reasons to sell get us out of positions, and we're still holding our core position. The key about this trade and how it compares to some of the underperformance that comes across my desk from retail independent traders are the variables that we're putting into this trade, the variables that are in our favor, the multiple variables that are in our favor. I mean, isn't that a type of trade that you want to put some money into? If you give me a trade like that, and you have a trader that's putting on risk at our firm with a trade like that, I am totally fine with the results. Have at it. We want that guy building from those particular trades and putting more and more risk as they earn it. The variables in our favor are beaten down stock, news catalyst, high short interest, elevated RVOL, holding above VWAP, consolidating above VWAP, breaks out of the bullish wedge pattern, high a day news catalyst pattern. That's very different than I've found an off-the-shelf technical indicator that somebody famous who has nice hair and goes on TV has told me works, and I'm now going to try it. Okay, that's a very different type of trading that some of those people are doing than this. This is professional edge trading.
Andrew, do you wanna end this for us?
Yeah, I just want to thank Mike again, and thank you very much for watching us. My name is Andrew Aziz from Bellafiore Traders. William Hathaway, or his nickname is A Dog, with Mike Bellafiore. And if you guys want to know more about Mike and Steve Spencer trading at SMB, you can check their website, SMB University and SMB Capital, and they have an excellent YouTube channel as well that you can learn a lot from training. Mike, again, I just wanted to thank you for your time. I really appreciate that. And I highly recommend your books to traders out there, One Good Trade and The Playbook. Very useful for retail traders. I really appreciate that. If there's any concluding remarks, please feel free.
I appreciate you saying that. Appreciate the time. And look, the concluding remark that I leave with you guys is how I finish the playbook. I have seen lots of guys struggle who have become consistently profitable traders and then great traders. One of the black shirt traders at our firm used to make $4,000 a month. And now is a black shirt trader and still getting better. His goal now is to become an 8 figures a year trader. And he's going to get there in time. I conclude the playbook with, you can be better tomorrow than you are today. And so if you are not doing as well as you think you deserve to be doing in trading, you're not there yet. If you're not trading as profitably as you want to be, you're not there yet. If you are not capturing the opportunities that you know you have edge with, you're not there yet. It's just not yet. But if you keep working at it and you create a routine to help you get better and you develop really good habits and you make a big deal about those trades that you have with edge, and don't let anyone give you any shit, Andrew, about the way that you're attacking markets, because it's awesome. Any kind of edge is awesome. You can build from that. And you can get bigger and bolder and express those edges in different ways. And they can open the door to things that you're not potentially seeing yet, but you will be able to. So it's a process. You're not there yet, but keep at it and you can get there.
Perfect. Yeah, that's the level of resilience that you need for trading. Baby steps, eventually you'll get there if you really wanted that. Well, thank you very much, Mike. William, over to you.
Yeah, no, thank you, Mike. No, thank you so much for your time. We really appreciate it.